Identifying proper market context is one of the most important things that we as traders are doing daily. And sometimes the context is as easy to identify as the downtrend working lower, where key entry points are holding price nicely and high probability setups are working like clockwork. On the other hand, the market can have no clear direction. It can be pure consolidating structure, and it can be very hard to find a decent entry. And you need to understand that you need to play different rules on both of these structures. When it's a downtrend like this, you cannot really cherry pick, you cannot hesitate, you have to execute the trades because the trades are easy to spot. And on a market like this, you really need to practice your patience. You really want to only take the setups that you know that you're not forcing an entry, because the structure is looking like a trading range, which allows you to trade it both ways, buy and sell. But the highs are not static and the lows are not static, which will confuse a trader. There's a bearish bias and it ended up being a downtrend that is working lower eventually. So this was a quite confusing day. The market opened somewhere around here, and after open, the price action really had no clear direction. But let's talk about the price action rules and how to trade it properly, because the downtrend started, we had the break and the new extreme formed, which tells you that the downtrend played out and the sellers are no longer in control. After new low is formed, you're expecting for price to reverse or even stay in the correction. We had a pure reversal. You guys can see I'm drawing the short-term trend lines because I'm applying the same rule for the uptrend as for the downtrend, and price is really fitting nicely inside of this uptrend. And I have a break of this uptrend. So what I'm looking for naturally I'm going to be looking for two-legged pullback, second entry at the key entry point, because if I get a two-legged pullback at the key entry point, that is going to be a high probability setup. And also I'm expecting for a new high to be formed. But look what you have. I don't have a second entry at the key entry point. Instead, I push lower, which indicates bearish momentum, and I have a second entry below the EMA. That's bad. I don't want to see second entry below EMA while there's a downtrend working lower. I need to even respect the short-term corrections. I'm drawing the short-term corrections here because I want to see a break of the correction, new high. I want to see a break of the correction, new high. This indicates that the current correction is over. So this downtrend is working and this uptrend is working. When I have two conflicting beliefs, I just sit on my hands and I don't do anything. So even though you have a trap, first entry long, second entry long failure, and it eventually would have worked, it is quite tempting to take. I'm not going to market because I have two conflicting patterns and I just want to be patient and I want to wait for cleaner setups. So this is why I was a little bit unsure here to take this trade, and I think it is smart to stay patient. Once you have two patterns, you're still waiting for a new high to be formed. You have a break and a new extreme form for the downtrend. Okay, so the downtrend is no longer in control and you're still expecting a new high to be formed. But look, this is what happened. Eventually, market consolidated in this tight little trading range. EMA is completely flat. It's starting to be in the middle of those bars. And this really shows you that there is no clear direction and you really need to be patient, because this is right now a trading range. Small one, but it's a trading range. And the way you trade range is you buy low, you sell high, and you fade the breakouts. But there are really no clear entries to really buy low or sell high. It is very unstatic. And I just didn't want really to risk any entries after market open, because the market was really fast still after the open. And I thought we're eventually going to break out. So the only clean entry that I see is you have a micro double bottom, which resets the count. And the only thing that you want to focus is you want to focus on the second entries or second entry failure. And you have first entry short, second entry short. They failed. Why am I not looking for second entry short? Because we're coming from the lows. So I'm expecting for price to go all the way up to here. This is why I'm not looking for second entry short. Instead, I'm looking for second entry short to fail. All right, and it failed. Nice big bullish bar. I'm expecting for price to reach all the way up to here. Price eventually crawled way up, but it strongly turned down lower. All right, still, if you don't see any entry during this consolidation, that's completely fine. It's always better to stay patient, because this is a clear, easy structure, very predictable, and this is a clear indecision. So when it's in indecision and you don't have a good setups to buy and sell, it's completely okay to be patient. Patience is better than forcing a trade. The market pushed strongly lower and most breakouts of trading ranges will fail. And this is a small little trading range. Most breakouts will fail, but however, you want to let this downtrend play out. You don't have a break and a new low, and you don't have a good signal bar either. And you have a break and you have a first entry short, and you have a strong push above EMA. EMA is not holding price, and you have a second entry short failure. As price pushed above the key level, the support above the EMA, this indicates strong bullish momentum. This indicates price is back into range, and I'm looking for price to reach all the way up to here. Notice you don't have a new low of this downtrend, and that's okay, because in smaller trending ranges, in tight ranges, you don't want to hold on to the idea of new extreme too long. If you don't get a new extreme and you have an attempt, that's enough. Quickly reverse. You guys can see you have a uptrend working higher, you have a break, and market instantly turn down, and you don't have a chance to create a new extreme. So in smaller trending ranges, these tight trend lines, you don't want to be holding on too long on the idea to get a new extreme. Once price pushed above the EMA here, I knew that there's not going to be new retest, because if there's going to be retest of a new extreme, EMA is going to hold. All right, so remember this, in a smaller trading ranges, tight trend lines, you don't want to be waiting too long. When the pattern is big, the bigger the pattern, the bigger the corrections. Okay, so when you have a large trend and you have a break, you can wait a long time before you get a new extreme. But the rules are a little bit different in these trading ranges than in a bigger pattern. So take a look. With the direction of a trend, you're taking the second entry at key entry point, and this is a failed second entry short because the context is range, and we're back into range, and both key entry points are holding. So I don't want to sell. We're back in range. I want to buy. Then market consolidated, and I don't see any clear entry because EMA is completely flat. EMA is getting in the middle of those bars. It is indecision. So you have a new high, first entry long, second entry long. But I don't think it is safe to take any entry in this congestion. Really wait for a price to clear out, because you can both make a case and manufacture story to buy and sell at the same time, and you know that's bad. You never want to feel like it is tempting to take it both ways. Market eventually broke lower. As I was watching this, I expected, okay, finally this consolidation, this mess, this indecision is over. We're about to start a downtrend. We're about to go to the low of the day, which is always important. Never forget to mark the low or the high for the day. These important key levels will come into play. We're going to talk about that as well. So as the market was pushing lower, I'm going to draw these short-term trend lines. I take a look how I'm drawing all the time these short-term trend lines, because I want to see a breaks and a new extremes for the short-term trend lines. That's the only thing I have in these ranges. I have a new low, first entry short, second entry short. Also, I have a break and a new extreme. And this is a small little two-legged pullback. So this was my second trade. This is my first trade for the day. This is my second trade, and I got a little bit lucky here because it ended up being a two-tier trading range. Okay, you guys can see that this trading range has two tiers: first tier, second tier, and I got a little bit lucky that I managed to get the scalp before hitting the bottom tier. But this is why today was so hard, because it looks like a range, but no static highs, no static lows. You just keep pushing lower. And this is why it was a little bit tricky to trade. But nevertheless, this is my second trade. Two-legged pullback. You just have a break of this downtrend. So I'm naturally expecting for price to give me a new extreme. Price reverse strongly from here. And as price reverse strongly from here, this is clearly indicating a trading range. All right, this time we're probably going to get all the way up to here. This is the rules that you are playing. Take a look. I have the short-term trend line. I don't have a new extreme, so I have a break. And I'm waiting after a break to get a new extreme for the uptrend. I have a new high. First entry long, second entry long. Okay, you guys can see that I'm only paying attention to the second entry longs. I'm not second entries. I'm not taking first entries or third or fourth. Okay, I want to see a clean entry. So this is the first entry long, second entry long at the exponential moving average. There's a break, attempt to create a new extreme, but it's okay. It's only an attempt because EMA holds price. Small little bar. I tried to take this trade, missed instantly. It happened like in 2 seconds. Boom, gone. You couldn't get in with the limit order. It would have been quick, easy scalp, unfortunately. But hopefully you guys understand the price action here. And here's what really changed the day, because you're expecting after such a strong move to really reach it up here, and it didn't work. You have a first attempt to create new extreme, failed. Second attempt to create new extreme, 2 times to fail, and you fell down lower. So this, you can see that there's a bearish imbalance. You keep making new highs and you keep making lower highs and lower highs. There's a bearish imbalance, and you can see that there's a trend line in play that is working. All right, so after you have a 2 failed attempts to create a new extreme, you don't want to force it. 2 times is enough. That's tied down to human psychology. This is why we focus on second entries. After you push strongly below the EMA, You have a first entry long, pullback, below EMA, you're still below EMA, second entry long, failure. All right. Why is it okay to take second entry long here and not take this second entry long? Well, because this second entry long is just an first attempt to create a new extreme. I already had 2 attempts to create a new extreme, both got slapped. There's a trend line in play, so the bias is changing. All right, always you need to analyze the context. Don't keep buying and forcing the market to make a new extreme. You're going to be buying into this trend line. Okay, so once you get enough information that the market cannot push it higher twice, and it's pushing below EMA, especially you don't want to be buying below EMA, that's when you can tell that this is going to be a failure, this is going to be trapped. So it is safe to reverse short. Plus you're at the highs of the trading range and you're heading all the way down to lows because you're still swinging up, down, up, down, up, down. So this is a range like vibe. Okay. Market push lower, you're at the bottom of a trading range. You don't want to take second entry short directly into support. It is consolidated, pure congestion. You don't want to pick a bottom as well, but you have a break and you have a new extreme and the support is holding. And I noticed there is a nice higher low setup, really nice bullish pin bar, which a lot of shorts got probably trapped going short directly into this low right here. So I think this is a decent entry to take a chance, a little bit aggressive. If you find a two-tier trading range, if you don't have a 2-tier trading range, this would be aggressive. But if you have a 2-tier trading range, and you can see that price is reacting, still bouncing up and down. This is a nice higher low after the downtrend played out. So once again, the same story. I'm just drawing the short-term trend lines and I'm looking for second entries. And now, when I was watching this live, this was the first break for the uptrend. So naturally, once again, I'm expecting new high, and I see a new high, first entry long, pullback, second entry long. I was expecting to get a second entry long and go long here. Instead, EMA didn't hold price, and price pushed below EMA, indicating strong bearish momentum. As price did that, I stopped looking for the screen for a few minutes because I was expecting, okay, there's not high probability setup, and I didn't really have this downtrend at the time. So I was expecting a second entry long. So I luckily missed this trade because I probably would have ended this trade. This feels like a two-legged pullback, second entry long. Yeah, I probably would have ended this live. But looking back, there's a downtrend working lower. There's a pure bearish imbalance. Also, you have a break, attempt to create new extreme. It's not quite double top, but it's close enough to be attempt, and you have a big bearish bar. Pure rejection. EMA is not holding prices. You push below EMA. This is a good indication that the bearish momentum is stronger, and EMA is flat in the middle of this bar. This is how you know it's going to be trapped. Bearish imbalance, downtrend, big bearish bar. You have a break, attempt to create new extreme. It's the first entry long, second entry long, failure. Market push strongly lower. I keep drawing these short-term trend lines. I have a break. I have a new extreme. All right. And once you keep pushing finally lower, your first target is the low of the day. And why is the low of the day so important? Why is key level so important? Why just this in key level? A lot of times in price action, low of the day key level, price will consolidate around it, and you will see price hovering around, and eventually it will break in one direction or another. Once you're at this key level, you want to start limiting shorts. You don't really want to pick a bottom as well. The best thing is just to be patient, wait for price to break out of this area and resume some trend. But you guys will see a lot of times these low of the day areas or high of the days, important key levels that will come into play, and price will always hover around these areas. All right. So we push lower. You have a new low, first entry short, and you have a strong push above the EMA. All right. And this pattern is very similar to this pattern right here. This is a failed second entry short. EMA is holding, trend line is holding, big bullish bar. This bar was way too big. You gapped, so you didn't get filled on a limit order. Once price goes and you reach the scalper's profit, you have to cancel the order, because once price reaches scalper's profit, you cannot no longer enter. Price reversed, and you have once again, price action works like clockwork. You keep expecting the same thing. You have a break, you're expecting new high. You have a break, you're expecting new high. You have a break of an uptrend, so what are you expecting? New high. There's a first entry long, second entry long, but horrible signal bar. And to be honest with you, at this point, I adapted. I don't want to force the market. As I'm seeing these failed second entry, I see a move up, failed second entry long. I see a move up, failed second entry long. I see a move up, failed second entry long. Move up, I'm expecting a failed second entry long. However, there's no chance to take this failed second entry. Horrible bars above the EMA. You don't get a nice failed second entry long below EMA. So you unfortunately have to let it go without you. You have a break, 2 legs to a new extreme. You don't want to be selling below this key level, below the low of the day. You have a new low, first entry short, second entry short, and you have a repeat pattern of this. Strong push above EMA indicating strong bullish momentum. EMA is holding, trend line is holding, and the low of the day key level is holding. Okay, just plot your key level and it will come into play. Nice bullish bar, repeat pattern of this, and similar pattern to this failed second entry short. All right, first entry short, second entry short, failure. As price quickly broke this uptrend and you push strongly below EMA, I'm expecting the same thing. I was right here. This is a downtrend. I'm expecting a failed second entry long below EMA. You never get it. Lower high worked, and by the time you get a failed second entry long, once again you're already at the bottom. You move way too down. You have a break and a new extreme form, which means that the downtrend played out, and I have a 2 legs down. So I'm not going to go short after the downtrend is completely over. Okay? From this point, if anything, you have a 1, 2, 3 pushes down, which indicates major trend reversal. So you may be potentially looking for any reasons to go long. I still, when I was watching this live, wasn't leaning towards longs, but I should have. Market push higher. And here we're getting to my last trade for the day, my third trade for the day, where you guys can see there's an uptrend working higher, and I decided to take a chance on this lower high. And I knew this is going to be a very risky trade because the bullish momentum was so strong. I'm picking a top, and what's going through my mind is that if I catch a major runner here, I'm going to really win on the numbers. I'm really going to catch a big runner because the downtrend is holding. Don't forget. What happened? I managed to get out of this trade at break even +1, I think, because after this lower high, there is a 1 doji, second doji, and a third doji. Trend line, big trend line key entry point is supposed to generate momentum. If I enter on this aggressive risky trade and I don't get the results I see, I'm not gonna argue with the market. I have a 3 indecision doji bars. We were supposed to already push on the first bar if this is a good key entry point. The fact the second bar is a pure doji and the third bar is doji again, this tells you that you're supposed to adapt to the market and not take the entry. So luckily I exited. Market created a new extreme. I didn't want to re-enter because this felt too bullish. It would have worked. Even this lower high would have worked, but this is a major. You're coming from the low of the day. You have a break. You have a new extreme form for the uptrend. So you guys can see how these trend lines work perfectly. You have a new high. So expecting first entry long, second entry long, failure. You don't get failure. You get it all the way down to here. So you don't want to go short all the way down to here. You have a new low, first entry short, second entry short. But take a look. You're expecting a new low of this downtrend. Yes, EMA is holding. Yes, but take a look. 2/3 of this bar is basically a doji stem. Bullish is bullish stem. Excuse me. 2/3 over half of this bar is a bullish stem indicating bullish momentum. Also, you don't have much room to this key level low of the day. So for that reason, this trade is risky. However, if you took it, I definitely see why, but this is such a horrible stem, bullish stem. It's really hard to take entries, shorts like this. And by that time, price is consolidated. It break off the congestion, but it is only easy in hindsight to take this trade. You created a move to a new extreme. So this downtrend played out with the break and new extreme. Once again, you're hovering around this key level. I think that it is better just to wait here still. You have a strong push above EMA, first entry short, second entry short, failure, but above bearish bars, horrible bars. I don't want to go long above bearish bars. Then you have a pure congestion. And what that means, this is indecision, and most breakouts of these congestions will fail. But you want to fade these breakouts with the direction of a trend. So you trend it up higher. You don't want to be fading breakout to the upside. No, once you have a breakout to the downside, that's what you want to fade. So this is a decent entry, but since still this is indecision area, I'm not a big fan, especially you have a break and new extreme. But just for you guys to understand that these congestion areas, you want to fade these breakouts and you trade up higher. So you're most likely going to succeed. Price pushed higher, and finally you get to clear entry for the day. you have a new extreme, you have a strong bullish spike. Finally, you're heading off of this key level and the uptrend is starting. What I'm going to do, I'm going to draw the short-term trend line. I have a new high, I have a first entry long, little pullback, second entry long, but I'm not going to go long when I'm not at the key entry point. The downtrend hasn't played out and the bars are overlapping. Here, I have a break, new extreme form, which indicates that the sellers are no longer in control. I have a 2 legs down and I have a nice big bullish bar at the key entry point with the direction of a trend, with the proper context. This is the easy setup that it's worth waiting. It's worth waiting the entire day for this one easy setup. Market took off. You're expecting to get another second entry long, but there's no good signal bar. Then you can see the trend is starting to lose steam. Once again, 1, 2, 3, major trend reversal. You have a new high, first entry long, second entry long, but you don't want to go long after trend is losing steam. Also, notice how I keep drawing the trend lines. You have to do the same thing. You have to draw the shorten uptrend. So you're going long directly into this uptrend at the very high of the move. When you have a 3 pushes up, which indicates major trend reversal, a lot of times price pushed lower. You have this downtrend, you have a break and a new extreme. I have a downtrend like this, but this doesn't really seem right. This is kind of way too flat, way too wide. Anyway, I drew it because I want you guys to point what's going on here. Oops, I didn't want to delete that. I wanted to delete this because I have a second entry short, but I have 2 conflicting patterns once again. So when I have 2 conflicting patterns, I'm not going to do anything, but just for you to understand, bigger pattern takes precedence. So I'm looking overall for price to go long, and I have to draw my short-term trend line here as well. So I cannot draw a short-term trend line like this. You guys can see this is nothing. I have to draw it from these first 2 swings like this. First swing, second swing. So I'm going short directly into this trend line, and overall bias has been pretty much up since this low. All right, so I don't want to be shorting. Plus this trend line is market really doesn't like these weird wide patterns. It was really the short trend line with the break and new extreme. Market eventually push higher, but you have micro double top, triple top. So you guys can see that you have attempt to create new extreme, first entry long, second entry long, third long, but you still don't want to go long, I think, when you have already this strong resistance. You're eventually pushed higher. You have a new extreme, which means that you'd want to stop looking for longs. This is why we are not pattern traders. You cannot just close your eyes and just trade every second entry. You have a first entry long, second entry long, but the downtrend hasn't played out. Look, this is a perfect example of how important context is. You have a second entry long, yes, but the uptrend already played out, at least temporarily. You have a downtrend in place, so you wait for price. First leg, second leg, downtrend played out. Once again, quite a messy price action. You're finally pushing above the EMA, but I don't see any decent entries. Each time you're below EMA. And even here, I don't see any good entry. I see a new high, first entry long, second entry long. It would have worked probably, but this is a bearish bar. You're not touching the EMA. Finally, you touch the EMA, but once again, bearish bar. This bullish bar is way too big. By this time, it's already obvious that this is a strong uptrend. And signal bars are not great. And it's already very late. I almost forgot. So, confusing price action early, looking like trading range, but there was a strong bearish imbalance. Remember, your job as a trader is to capitalize on the easy days like this and just stay patient during the days like this. There are still a few good entries because price action is really predictable. You guys can see how it goes up, down, up, down, up, down. It's still very predictable. You can almost sell every failed second entry long at the top, and you can buy every failed second entry short that is coming from the bottom. And this is basically what it is. Every failed second entry long from the top you want to sell, and every failed second entry short from the bottom you want to sell, because it goes against common sense. When you're going from the bottom, you want to stop shorting. When you're coming from the top, you want to stop going long. All right, so I'm going to wrap it up. Hopefully you guys had a decent day. I'm going to see you guys in the next one. Take care, buddy.